Hello, dear friends. Welcome to cryptosignals.io. In this video, we will review the basic principles of money management. How to manage your deposit, reducing risks, and increasing profitability at the same time. The first rule: no need to be greedy. You don't need to wait for the constant growth of the rate to get even higher profits when the rate is already high. Otherwise, instead of getting profit, you may lose. The second rule: be patient. Having bought at one price, selling straight away is not required if the fluctuation of the market is not high. There are many examples of the certain cryptocurrency rate being almost flat. Suddenly, in a week or two, it increased by 10-15 times. The third rule: make conscious decisions. The best time to buy cryptocurrency is when its rate is going down and to sell when it's increasing. Don't wait for its minimum rate. Focus on the currencies with above or below average rate to make sure you get profit. When waiting for the rate maximum, you can completely miss the moment and lose everything. The maximum level of cryptocurrency rate growth or drop depends on big players. Sometimes they, even if they want to, in certain situations, cannot predict the level of panic or positive influence on the market caused by masses. The fourth rule: don't pay attention to the walls. They are almost never applied, but have always been used for threatening. Sell wall, buy wall is the price level, which contains a large number of orders for purchase or sale. The fifth rule: determine the amount you are ready to lose. Never play with the last dime. Under no circumstances, invest all savings in cryptocurrency or take loans that you eventually will have to return. The game on your last money is never steady, confident, or long-lasting, so leads to hasty decision-making and inevitable losses. The sixth rule: money management. It is strictly forbidden to bet a whole deposit on one position. For safe trading on any cryptocurrency exchange, it's worth spreading bank between 10-15 different positions. What is the percentage of entry to the deal? Ideally, it shouldn't exceed 1-2% of the deposit. In case of an unexpected dump, rate drop, it will allow to chase losses by making small purchases on the dump, even in case when the primary purchase was made at the highest price. Keeping all eggs in one basket is the main sign of inexperience and lack of knowledge. Diversification helps to reduce risk. Nevertheless, you have to be ready to cancel position quickly if its profitability is lower than you expected. Imagine two people. One is the genius of technical analysis. He likes to play all in. And the second, a person who competently manages his deposit. The first person invested to the deal all in, and let's say 50%, tomorrow again invested all the money on the excitement and, as a result, of course, lost, say 70% of the total deposit. The second person invested 1-2% in each deal for a month. And by the end of the month, he has a stable small percentage of profit. Because trading is first of all money management, but not deep knowledge in the field of technical analysis. Let's consider an example. Let's say the deposit was $100. The loss of the deposit in the all-in deal was 25%. Accordingly, you will need to earn 33%. so that you again have a deposit of $100. And if a trader continues to follow such a strategy, the risk, as can be seen from the simple calculations, increases exponentially. If you lose 50% of your deposit, you will need to earn 100% to restore it, and so on, which is very difficult. Correct deposit assignment. It is advised to create 3 portfolios. The first, investment, long term. Here, keep assets you plan to hold from 6 to 12 months, or even longer. As practice shows, during this time, some coins make up to x20, x100. Keep about 5 top positions and 3 possibly prospective altcoins in your opinion here. The second part of the portfolio, the day trading. Money you keep for quick and risky deals within a single trading day or even an hour. Assets from this portfolio better to spend following the rule. Enter the position, got the profit, and exit quickly. The third part of the portfolio, fiat, is your cash equivalent to a purchase. Money from this portfolio may increase your deposit. Don't let the situation happen when you are left with no fiat money. Don't mix funds of these portfolios. Don't take money for day trading from investment portfolio and vice versa. The whole portfolio balance created on the period of 3 up to 6 months and may be revised after this time. It can be 40%, 20%, 40%, or it's up to you. Every trader has his own ratio. Emotions. Nerves are the trader's greatest enemy. Never make deals emotionally, because it's the shortest way to lose money. It is also useful to know it is better to sell at $10 lower than not to sell at all. And it's better to buy $10 higher than not to buy at all. Don't be afraid to give the market a small percentage in minus to yourself. Just stick to your trading strategy. Always watch the order book. If the number of sellers exceeds the number of buyers, after making a purchase at a good price, as it seems, there is a chance that you will not be able to sell what you have bought. Be aware of the trade volume and cryptocurrency capitalization to know whether to wait or not for the price boom at the current moment. If you want to buy currency and among the submitted orders are already available with a sufficiently large volume, it is worthwhile to wait. If large sales orders are simultaneously placed on the exchange, which moreover stand one after another, this may indicate that large traders are selling cryptocurrency, and this may lead to a downward turn. A similar situation with the buy orders, it may indicate a rapid increase in the rate. The market doesn't give an opportunity to earn every day. Have you noticed that when you have a fiat, you're itching to buy some coin? But more often, such deals don't lead to a profit. You don't have to trade every day. Use the corrections and rollback moments. Once again, about stop losses and profit fixing. In our signals, we give up to 3 exit points sometimes, but this doesn't mean keeping everything up to the 3rd exit point, because you can stay with nothing. Note, first, put your stop losses. Second, place orders for sale in advance, so as not to be I couldn't and I didn't have time. And about the sale, 2 options for you to note. The first, if you bought a coin, split the sale to all exit points in equal parts and place orders in advance. Second, if you still want to wait for the last exit point and sell all the purchased coins at the highest price, then watch the market and move your stops up the price movement. For example, the price entered to the sale zone number 1, and you should automatically raise the stop from 0 to a higher level, for example, minus 20% of the current price, and so on. It will save you from burning profits if the market turns around. Keep a journal of the deals. Master your trading skills. Your goal shouldn't be 500% per month, but the correct, maximum safe money management. Remember that trading cryptocurrencies is not a casino. It's a certain opportunity to earn, but not a guarantee of earnings. How to work with the Crypto Signals service and become part of a successful team of traders, you can check the link in the description. We wish you a good profit.